Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tendayi Kapfidze. He's the chief economist at LendingTree to discuss home ownership. Is it better to rent or own? Tendayi, it's great to have you with us on Trade Talks.
Glad to be here.
All right, let's start with trends in the housing market and where we are today as the economy starts to reopen.
Yeah, I think the housing market has really been somewhat of a surprise to me and to a lot of other folks in terms of how quickly it appears to be bouncing back from this COVID crisis. I think a big part of it is, of course, that we're seeing record low interest rates. So that's motivating a lot of people who, were thinking about buying a house to move now because, rates, it's uncertain whether rates will stay this low for long. So that's pulling a lot of demand into the market.
Are you seeing potential home buyers look more to the suburbs as a result of the COVID-19 lockdown?
So I've heard some and seen some anecdotal stories about that people are maybe less interested in living in very dense places. Certainly here in New York City, there's been a few articles about people, looking for houses outside of the city. I still think that it's too early to tell if this is going to be a significant trend and if it's going to be a long-lasting trend and if it's even going to be a big part of the housing market. But certainly some people are thinking, hey, I don't want to be in such a crowded place. And then also with the increase of people working from home, a lot of people are thinking, well, I don't need to be in this expensive place that I live in anymore to do my job. I can take my job, take my salary, and go somewhere that costs a lot less to live. So I think those are emerging trends, and we'll see over time how big they get.
There are numerous reasons why the cost of renting and buying a home can differ so drastically. Can you explain to us why?
Yeah, we took a look at the cost of renting and buying. And the one thing that we added to it is we looked at the cost of renting versus owning a home, I guess, not necessarily buying, versus owning a home with a mortgage or owning a home without a mortgage. And what you find is that when there's a mortgage involved, it's generally less expensive to rent, but when there's no mortgage, it's less expensive to own. And really it comes down to kind of a personal lifestyle decision, whether you rent or buy, but it's always important to know these metrics in terms of what's the relative cost of renting versus buying with a mortgage versus owning a house outright without a mortgage in your particular locale.
All right, and let's talk about that, particularly in the metro areas, because again, that conversation of ownership in the metro area after going through a lockdown versus the suburbs is really going to be key at this point. So where are you seeing spreads the widest and the narrowest between the cost of renting and owning a home with a mortgage?
Yeah, so New York City was the top of our list. The median monthly gross rent was just about $1,400, but owning costs just about $2,800 a month. So that's about twice the cost to own versus the cost to rent in New York. And you really see it in the statistics of people who live in New York, where a lot of people rent and do not own. And then also at the top of the list were other expensive cities such as San Francisco and San Jose.
And the most narrow?
The most narrow is actually a pair of cities in Florida, Orlando and Tampa, and also Indianapolis. And generally the places where that spread is narrower, you tend to have lower costs of buying houses. The rental difference is actually not that big across the country, the median cost for an apartment, but the ownership differences are much larger. That has a lot to do with the cost of homes and also the tax base and the tax costs in different locales.
And on the flip side of that, where did you see the spreads the most wide and the most narrow between renting and owning a home when there is no mortgage, whether you paid in cash or you've paid off your mortgage?
So maybe not surprisingly, it was still in kind of the same high cost locales. So San Jose, San Francisco, and San Diego were the places where you had the biggest spread in terms of the cost of renting versus the cost of owning a house without a mortgage. And in this case, the rent costs are higher than the ownership costs. And I think that has a lot to do in those locales. A lot of that ownership cost is tax cost. And so you see that big difference between owning with a mortgage versus owning without a mortgage. Just kind of the compounded expense of the mortgage plus the taxes makes it more expensive to buy there than to rent. When you take out the mortgage, then you're just left with the tax cost, and it makes for a big difference. And then the places where you have a much smaller difference was, again, relatively affordable cities, Providence, Milwaukee, and Buffalo in New York. And these are generally low-cost areas on the whole. So both the cost of renting and the cost of ownership are relatively tight. And so you don't see such a big spread between the cost of owning without a mortgage versus the cost of renting.
All right, and to wrap up here, we keep hearing about negative interest rates. So should the US go into a negative interest rate environment, how can that impact the housing market? What does that mean?
Yeah, so I'm very, very skeptical about negative interest rates. They've had them in Japan for decades. They've had them in Europe for most of the past 10 years. And really what you see is, those economies have not responded well to the negative interest rates. And it's not necessarily because negative interest rates don't work, but it's more that by the time you get to the point where you have your policymakers thinking of negative interest rates, it means you have other problems in the economy that are much bigger and much more insidious, and the interest rate or the cost of money isn't really going to solve for that. So I think in terms of broader economic growth and affecting the economy as a whole, negative interest rates will not do a great deal in the United States, just as they have failed in Europe and failed in Japan. Now, the housing market is a little bit different. If you do get negative interest rates, that means even lower mortgage interest rates, and probably that will provide some support of demand to the housing market. But it also means a lot of that low interest rate is capitalized into the price of housing. So it can actually make housing less affordable. So it helps people get in the house, but then it also makes housing less affordable over the long run. So the benefits of low interest rates, not that great for the broader economy, may be helpful for housing in the near term, but in the long run, ultimately would make housing more expensive. So I would come down on there's not a lot of benefit to negative interest rates in the United States, just as we've seen from Japan and from Europe.
Yeah, that's a great point. Tendayi, thank you so much as always for joining us on Trade Talks.
Awesome. Glad to be here. Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.